It seems like a lot of you were interested in an update video on Snowflake, so here it is. Let's start off with the major overview of the latest quarter. So product revenue increased 34% year over year. Net revenue retention rate still at 128%, so quite nice. Although, yes, over the last couple of quarters, it did come down, but 128% is still quite respectable. Total customers still increasing quite fast, 21% growth year over year. There are 709 Forbes Global 2000 customers, that's up 8% year over year, I believe same thing as the quarter before. Snowflake Marketplace listing is up 6% quarter over quarter and 35% year over year. Overall, this company is still growing and growing quite fast. Maybe not as fast as before, but I mean, if you look at all of these metrics right now, still a fast growing company. Now, with that said, the markets are always forward looking. For fiscal year 2025, guidance for product revenue growth sits at 24%, which was a bit better than before. That was revised up. The problem was non-GAAP product gross margin 75%, so that's down. Non-GAAP operating margin only 3%, that's down as well. Non-GAAP adjusted free cash flow margin of 26%, of course that's also down compared to fiscal year 2024. The major reason here is that, well, they're investing quite a lot in all of the AI capabilities, also investing a lot in NVIDIA GPUs. So in the short term, they are taking a margin hit. Also, their guidance does not take into consideration any of the new product launches. So of course, that might be putting the bar quite low. There's also a new CEO coming in, so they might be sandbagging it in order for him to outperform. Now, despite all of that, all of the great growth by Snowflake, by the way, at the time of making this video, stock is up 2.8% during the day, filming this on Monday. But year to date, the stock is still down 35%. Over the years, as you can see, total revenue has increased quite nicely, free cash flow positive as well, although free cash flow, there's a lot of SBC there. As you can see, SBC as a percentage of revenue, last 12 months, still is above 40%. Quite an issue. If we look at EPS growth rate in the next 5 years, currently it still sits above 25%, so that's definitely quite positive. But this is not a cheap company. Yes, it is growing fast, yet it is pretty strong. Yes, a lot of big companies are using its software, but it is not cheap at all. And that will be something we're going to touch on in a bit. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so, looking at forward PE, EV to EBITDA, price to sales, price to free cash flow. Right now, forward PE 195.2 times. Yes, it's lower than its mean, but still it is quite expensive. Of course, you could say PE right now doesn't make much sense to look at it currently. Okay, I could agree. Even if you look at EV to EBITDA, it's still extremely high, 149.1 times. Looking at price to sales, 12 times, yes, lower than the 29.2 times, which was the mean here the last 2-3 years, which is not cheap either, 12 times. Of course, we've seen companies that have 20 times sales. I believe NVIDIA is at 20 times or something like that. But of course, this is not NVIDIA. NVIDIA is generating, I believe, over $20 billion in free cash flow a year now. So yeah, quite a big difference. And last thing here, price to free cash flow, that's in the last 12 months, you're paying 51 times. So again, definitely not a cheap company. A market cap of $43.8 billion. Yes, growing quite fast. Yes, the stock is down 35% or so year to date. But even with that, it's true, you might have a better entry right now. It's cheaper, but it still is quite expensive. If we look at the average analyst price targets, sits here, it sits 51% higher than the price we're at today. Of course, Snowflake was an extremely popular IPO, so lots of analysts have positive coverage on this company. So that might be one of the reasons why price target sits 51% higher than the price we're at today, despite the stock today being already quite expensive. If you look at what the analysts are expecting in the coming fiscal years, sales growth continue to grow around 23-24% year over year. EPS growth for fiscal year 2025 dropping 35.5%, but then reaccelerating, growing 58-59% year over year for the coming 2 fiscal years. So you're paying a little bit less than 100 times PE for 2027. So As you can see, even with the incredible expectations for the coming 2 fiscal years, it's still going to be quite expensive. Of course, these are just expectations. Expectations can change over time. Now, what has happened more recently? Well, more recently there was a data breach. So apparently the data breach affected less than 2% of the data cloud company's customers. The incident, which was first identified in April, involved a criminal actor or actors using customer credential obtained through InfoStealer malware. It affected about 165 organizations as they gained access to customer environments. The investigation yielded no evidence suggesting Snowflake's environment had been breached or compromised during the incident, which also explains the company not having filed an 8K related to the filing. Of course, that was, let's say, positively received by the market. More recently, they also had a Snowflake event where they unveiled new products. So first up, according to an IDC survey, AI applications are the largest category of AI software, accounting for half of the market's revenue in 2023. So Snowflake unveiled Snowflake Trail, an observability product that helps users troubleshoot and debug errors. Some analysts were a bit less impressed with the event, saying that the event was light on financial targets, which is understandable given the near-term uncertainty associated with the business transitioning to incorporate critical AI features, said by an analyst at Bank of America. However, we are encouraged by ramping usage of new products expected to contribute to fiscal year 25 and fiscal year 2026 growth. Bank of America rates Snowflake neutral with a price target of $200. So of course, much higher than the price we're at today. They expect new products such as Cortex AI to start contributing to revenue later this year, while Snowflake Container Services and Streamlit should start benefiting the bottom line next year. Meanwhile, Oppenheimer maintains an outperform rating on the stock and a 12 to 18 months price target of $220. Of course, we've seen before the average analyst price target still sits 51% higher than the price we're at today. At the event, Jensen also joined virtually. He was still in Taiwan, had that Computex talk, talked about Snowflake, talked about NVIDIA, their great partnership, product launches, etc., etc. Jensen is a great salesman. He always is at the right time to make sure that his partners, his customers always get, let's say, some positive attention. Fortunately for the stock for Snowflake, it didn't do much. Actually, the stock went down the day after. When you have negative momentum with your stock, that usually happens. Even the great Jensen 1 cannot change that. And so right now, if you look at the stock, we're starting the week with a green candle. So could $125, $130 be a sort of a bottom right now? Remains to be seen what happens throughout the week. RSI on the weekly was pretty low. If we move to the daily, I believe it was oversold. Yeah, it was oversold here at around 125 or so. So now we're seeing a small reversal. But if you look at the weekly, yes, we were in no man's land, went under that higher lows that started already since, well, the lowest low was in June 2022. Then we got higher lows along the way. Fortunately, in the last couple of weeks, we got a huge red candle. It went down below. And then, I mean, from a chart perspective, we're still in no man's land. It really depends what happens in the coming days if we can truly end this week with a big green candle. But overall, you still want to see the business continue to accelerate top and bottom lines. Yes, guidance does not include the new products. So maybe in the second half of the year, we might come out with a surprise with, oh, look, we're actually growing much faster. We're already seeing some positive effects from the new launches, etc., etc. Because even currently, even after that huge drop, the stock is still extremely expensive. Yes, it's a great company. Yes, lots of big companies are using it. They have tons of customers. All of that is true. But I admit as well, it is still expensive. So it remains to be seen what happens. Of course, you can always dollar cost average, bring your average down. If, of course, that's what you want to do, if your thesis is still intact, if you still want to hold this for the long run, because don't expect it to be worth $300, $400 in a year from now. I don't think that will happen. At least the fundamentals do not give it the justification, let's say, for it to go up so much. Of course, I can be wrong, but so far I'm not seeing a $400 price target or even a $250 price target making a lot of sense currently for Snowflake. So that's about it for this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.